Let's do a quick round of introductions and then jump right in. Tamar?
Hi, Tamar Abell, Sniff Metrics. Been working in corporate compliance for over 20 years, specifically quality of care CIAs.
Hi, Keith Parnell from Hamilton Insurance, working exclusively in the long-term care industry, nursing homes, assisted livings for the last 31 years.
Josh Ray, been in the business almost 30 years, and when you need me in a crisis, you just call and we come to help you. I paid them to be here, by the way.
Nice work. Abe Gutnicki, founding member of Gutnicki LLP, run a law firm, spends a lot of time working in healthcare, specifically in the SNF industry. Founded the firm almost 20 years ago, and you all have the pleasure of wearing my name around your neck. So thank you for that.
No, thank you. They're really nice.
Okay, let's start with a lightning round of question. As the only operator on the panel, what should be keeping me up at night?
I was an operator too. That you really understand the risks in your building. And not just the, when you think compliance, you think of your anti-kickback, that you really know where your trends, where your issues are across your corporation.
Keith?
Trying to plan for all the changes that are coming. The insurance industry's definitely hit a hard market, and really planning for those, doing a lot of risk management and trying to project what's going to happen in the future.
I think understanding that we are an industry that's always under fire, and what has happened the last year and a half with the COVID pandemic and everything that is going on with that, has just put another focus and spotlight on our industry, that we always are the bad guys instead of the ones that really, dedicate our lives to the betterment of the residents that we serve. So really being prepared for that spotlight, because it's gotten very ugly. I mean, between the media and the government sanctions and state sanctions of what they're doing out there today, is understanding that so you could be prepared to make sure that you're protected.
So as a transactional attorney, that's my forte. I think take a slightly different approach to the answer. We talked about all the operational issues. If you're doing a deal and you're contemplating acquiring, financing, whatever it might be, due diligence should keep you up at night. Due diligence. There's a lot of changes, and what may have worked, we can get into this further along the way if you want, but what may have worked, 3 years ago, 5 years ago, you're in a different landscape, so make sure you know what you're getting yourself into and you do your diligence properly.
Okay, so here's the question for each of you. You each referenced the changing landscape on account of, as Josh said most eloquently, the increased spotlight, and you each referenced the government, which we'll get to in a minute, but specifically, how do you see the landscape, the risk landscape changing right now and in response to COVID? Josh, you're first.
Great. I guess if you're the biggest, you go first. I don't know.
That's how I got my job.
That's right. I want to just preface before I answer is that this in no way, shape, or form is for doom and gloom. I know Abe and I prepared. This is not why I am articulating what I'm articulating. I just think that you need to know what's out there. And if you know what's out there, you can be prepared. Now, does that mean that is going to happen? No. But because of the fact that I have been involved in so many different facilities, getting them back into compliance when they are at the brink of termination, and because of COVID, and most of the facilities that you guys read about in the newspapers, unfortunately, I was in, and I think that what COVID has done has people rebased about how they're going to look at things that we take as normal in a facility, such as 3-bedrooms and quads. There are certain facilities that I was in that the state agencies actually said, we will not renew your license until you get rid of all your 3s and your 4 bedrooms. And they actually did that, and they actually decreased their beds, which causes a whole other host of issues with your lenders and and what you thought you bought an asset for, and then all of a sudden, because of that, I'm not saying that's going to happen everywhere, but there in 2 states specifically that I was in, they did that. So you have to go back to your ownership and your landlords and your banking relationships and say, hey, we recognize because of infection control 880 FTAG that you have a situation where they want to make it so it doesn't happen again, or something of this nature happen again, that they're now telling you that your asset is worth 35% less than what you had before. And that's actually happened. I've actually negotiated contracts with the states. It was either that or they were going to pull their license. Now everybody's like, how can they do that? They can't do that. They can. They do, and they will. So I think we have to understand that that is something that is not just for a COVID pandemic, it's for any type of pandemic. They fear, because of the lack of knowledge and because it hit us hard and fierce, there was no preparation necessary. So they were making, as we all know, different types of laws and different types of policies and procedure based on fluid information every day. Yes, wear a mask, don't wear a mask, making that right, PPE being out, and like crazy. So they don't ever want that to repeat itself. So the 3 things that I think that they're working on now is that there are certain people that are vying for. Again, I'm not saying this is happening, and this is where I'm hearing, because I sit on these committees, is A, reducing bed size, B, making sure that everybody has 6 to 8 months of PPE supplies that can never be touched as a disaster preparedness situation, to make sure that that happens, and C, making sure that you have a consultant, infection preventionist, that is constantly on staff so that they can help educate how not to how to use proper procedures so that any type of breakout of anything you would be able to contain if it does break out in your facilities.
Okay, so just to distill that, you are seeing an uptick in broader investigations as a result of FTAG 880 issues?
Absolutely.
You think it's going to continue?
I think until they get a good handle on how they're going to deal with it globally, you're going to have that, because there's been a lot of, as we all know in our industry, when something goes wrong on a facility level, that always goes to the governor's office, and then it goes all the way up to the federal government. The problem is that they, as always, had no understanding of how to handle the pandemic. So when they don't have an understanding how to deal with it, what do? It's not us, it's look at these guys. We always are the scapegoat. But what happens is that they then have to come out with a hammer, because they have to show the federal government, is that this is an issue, it's them, not us, so don't look at us, and then come out after us. And that's always been our, I found, and I think Tamar can speak to that, that once it all happens, and once they hit you with the wrecking ball, once they all do that, then negotiating with them and making them a plan, they're a lot more easier to deal with.
So you have been seeing an increase in CIAs, an increase
Yes.
in SFF and of the like?
Yes.
Okay. Tamar, do you want to walk us through that process and what you do about it?
Yeah, sure. I think just over the last 20 years that I've been working with the OIG, I've seen a real difference on their expectations of us. I was a victim of a CIA 20 years ago, and it was way more basic of what the expectations were. Now I'm seeing they want to really see a sophistication from the provider. And compliance is not just your book and you're checking your marks, it's really managing your risks across the board. And the expectation is that at the corporate level, that we know very specifically what's happening in our buildings in all regards, not just anti-kickback, but your quality of care, your grievances, your risk, all risk has to be looked at compliance. I see compliance kind of being people hate to hear, compliance, it's not. It's really your protection, and it's really, everything moves up to compliance. My experience with the OIG, I was working in a very high-profile building during during the COVID, and it was Easter Sunday, and we were melting down. We had 60 deaths that weekend. Picked up the phone, and I called the OIG on Sunday, and I had senior people from the OIG on the phone, and at that point, again, this is post-negotiation, we're deep into the CIA. I said, we are really in trouble here, and they worked with us.
And they were helpful?
They were helpful. They pulled back for a while.
Because so far what I'm hearing is we're expecting increased scrutiny. You know, Ronald Reagan said, the scariest words in the English language are, I'm from the government and I'm here to help.
Yeah.
Right, so we have...
This was post negotiation. No, I can't say it enough. For the providers, you need to be prepared. You need to know your data. You need to have a platform to look at your data, to look at your grievance, know what your families are complaining about, know what's going on.
Okay, but so far what I'm hearing from the panel, and I will say that this tracks to my experience, we had a global pandemic, a virus that targeted our population, and the hardest thing to deal with was the government reaction. Is that right? Everybody's feeling that?
Yeah.
Yes,
I think-
absolutely.
Okay, Keith, I'm going to pick your brain a little bit. Turning away from government and the scariest words in the English language, a lot of our risk is insured. What do the markets look like? What's happening?
Sure, and to really speak to and lead right off where Tamar left off, the insurance companies like certainty. And so the model that they're used to is not the model that we have now. A lot of these, with the advent of PDPM, the nursing homes are now looking for higher acuity patients and changing that whole care model that they had before. They're now, battling with inpatient care facilities and LTACs and home health care, so occupancy's down. That's not the model that the insurance companies thought they had. And so from a risk management standpoint, first of all, your corporate compliance and really showing that your care team and the model that you have out there is what's going to go through in the future, and really show them how it's going to not impact financially. So the insurance companies like the certainty, the better job that the facilities can do, really showing what they're doing to change the way they're doing. We've got the advent of telemedicine now. We've got all these different processes that are coming into facilities. That's all different. And so being able to show a good team of individuals that work with the facility, the consultants that come in and help out, all of the care models and how it's changing and the risk associated with that, whether it be contractual or otherwise, all of that information is pertinent. And as I'm sure all the nursing homes know, insurance can be a significant portion. We're not just hit with professional liability now. We had workers pass away from COVID, and we've had all kind of storms. And so you've got a perfect storm, and I hate that word, but you've got properties going up, liabilities going up, workers' comp's going up. You've got individuals on health insurance. All of these different things are hitting at one time. So where your budget for liability insurance or whatever may have been one number, it could be significantly different. And as Abraham mentioned, when you're doing your due diligence on an acquisition, it's very important to get that proper valuation on what these costs are going to be going forward, or you're going to blow your whole model from a finance standpoint. So the changing landscape is definitely coming. If everybody knows what's happening, it would be amazing, but there's a lot of things that are going to change.
So Keith, one quick follow-up question. We sit here in Florida, a state famous because 20 years ago, on account of Wilkes and McHugh, nobody could bind the GL policy. Is that our future?
I think you're going to see the hard market for another year or two.
You think only 2 years?
Everything's insurable, even back in the early 90s. And as I mentioned, I've been in Hamilton for 31 years. I definitely rode through the hard market there. There's always going to be alternatives. People are coming up with creative programs. State of Florida does not have a set limit, so a lot of people reduced limits, took higher deductibles, changed the programs they're doing. Right now, we're seeing a lot more people tend towards self-insurance, where they're going to bear the risk. We also see a lot of risk retention groups.
Is that a smart move, keeping risk?
It can be, if you're prepared. And there's a huge differentiation in states and the CMS star ratings. If you've got a 5-star building, possibly nonprofit in a good state, a good venue, Wisconsin, Kansas, somewhere like that, sure. If you're in Kentucky and you've got a 1-star building that's teetering on special focus, probably not.
Okay, Josh, Keith said 2 years of hard market, and I saw you show 5 fingers. 5 years of hard market?
Listen, like I said, I don't mean to be the Mr. Doom and Gloom, but I see from the relationships that we have that everybody's going to an SIR type situation, self-insured retention.
Of necessity or of arbitrage? Is it
No,
a financial arbitrage, or is it a
I think it's necessity.
Necessity.
It's necessity.
Yeah.
I mean, when you have HUD limits that are set, 1 million, 3 million, And you have a situation where, because of the fact, see, it's the vicious cycle for us. We have a pandemic. A lot of people got very high violations, took their star ratings from a 4 to a 1, even though they were great buildings historically for years. And then you go to get insurance, liability insurance, and they look at you like you're you know, what is that? Women are for Venus, men are for Mars, like that situation. And then you have to go to an SIR situation. So to me, I think we're at least 3-4 years away. In my opinion, again, this is just as seeing that because people are making those type of commitments to the SIR reserve for 3-4 years because of the fact that they believe that the GLPL property, okay, is property, but the GLPL scenario is, there's significant exposure there.
I just want to highlight one thing, right? So Keith was pointing towards the markets being tighter for 2 years, but Josh, you're suggesting the fallout for those buildings that have fallout will have a tail that will make their insurance difficult, meaning if they took heavy CMPs, they might be excluded from the market, not because the market is still tight, but okay.
Correct.
So you guys were saying two fundamentally different things. Abraham.
Yes, sir.
I got one for you. So we saw a whole bunch of things that we've never seen before, and we don't know how to underwrite the risk. We had skilling in place. Nobody's ever seen a rack on it yet. Perhaps skilling in place abuse, we don't know yet globally. Really no guidance when we started doing it, and probably deficient documentation just because we were all caught with our pants down and worrying about patient care. We have PPP. We have an uptick in CIAAs.
Yeah.
So when you have somebody who walks into your office and says, I want to buy a nursing home, you tell them, here's a nice apartment building?
I mean, that's not a bad idea. What I would say is that, right, we are dealing with unprecedented times as far as diligencing risk when it comes to these matters. Skilling in place is a great example, right? We were skilling in place over the course of the last year, you know, obviously patients that have been diagnosed with COVID, patients that were exposed to COVID, and we had our PUIs, persons under investigation. And that's kind of like an amorphous sort of category where you can say, well, yeah, this one's under investigation, that one's under investigation, let's skill them all. And we don't know what the fallout is going to look like as it relates to that. You know, the potential for rack audits, right? It's a very difficult thing to assess. I can tell you that a lot of the deals that we've done over the years, I've seen deals kind of move sideways for a long period of time while parties, sellers and buyers were negotiating what will be the security for potential Medicare, Medicaid recoupments. And people, you know, buyer wants personal guarantees and escrows and sells. Like, what are you talking about? I've never had a, you know, take back in my life, so why would I have one now? So I'm not giving you anything. And then deals, you know, work their way out. But I would say that, and they still will. In other words, for every deal where a buyer walked away because there wasn't enough security for potential Medicare recoupments, there was a second, I guess it's called the greater fool theory, right? There was a second buyer saying, yeah, I can just live with that risk. And, you know, deals get done, right? My main advice would be know what you're getting yourself into. You mentioned, we talked about skilling in place, we talked about PPP loans, right? You know, maybe it's not a bad idea to ask your sellers to review their applications. There's potential False Claims Act liability that can result from PPP loans. Stimulus checks, Medicare advances, all these things can result ultimately, since we're always going to be assuming the Medicare, Medicaid contracts. And believe me, we've been through this many times where the parties say, well, maybe I'll just get a new Medicare contract, and they know, but then they find out about the, you know, the new Medicare surveys, like, yeah, that was a bad idea. So ultimately, you're gonna, you know, to close your deal, you're going to assume the Medicare contract, which means you are assuming this risk. And then the question becomes negotiating between the buyer. First, your due diligence, I mentioned that before. Do your diligence, understand what you're getting yourself into, try to assess the risk as best as possible, review PPP contracts. As far as stimulus payments, I would say most, if not all of my clients, I think that I spoke with, were very, very careful and diligent about itemizing how they were using the money. So if they're itemizing, then you can review it, make sure that things kind of check off, and you can remove that risk off the deck. When it comes to skilling in place, it's going to be a difficult thing. We don't exactly know how that will play out in a rack audit. There is definitely significantly more risk, I would say, for the next few years as this kind of irons its way out as far as potential Medicare recoupments. We used to live with it all the time when under the old, Medicare rug system. So, the warning sign was when you saw a nursing home owner that happened to have, own his own therapy company, his or her own therapy company as well, there is potential risk for, under the old rug system, rugging up and getting the reimbursement rates higher. I would say right now, given what we've just been through, right, we're at a higher level of risk as it relates to potential Medicare, Medicaid recoupments, and we should all be very careful in negotiating those deals.
Is that consensus on the panel? Everybody thinks that RAC audits specifically are going to be more aggressive in light of skilling in place, in light of 1135? Keith, you think so? You think they're going to come back in a year and say we spent
I think Gabe is 100% right, and this is a plug for him. Like this, if you're going to be buying something and you do not have this type of sophisticated organization or you need help, do all that diligence first. And
Right.
hire an attorney like this so they can advise you to do
Okay,
it,
so-
because to spend the money up front is way better than not make sure you're protected. But I do believe that there definitely will be, once this all shakes out and they'll see how much money that they put into how that people like skilling in place went up, like they're gonna be some sort, I don't know if it's gonna be a RAC mechanism that they're gonna use. They're going to audit you from beginning to end, and you've got to be prepared for that.
I also think we're going to see a dramatic uptick in False Claims Act and quality of care CIAs.
As relates to
As
1135?
as it relates to the whole COVID. There's a lot of meat for the OIG to work on right now. And I just, I usually, when I give a presentation, I start it with a picture of myself in an orange jumpsuit, because every one of us is one step away. So you have to be really proactive and be ready if the government comes knocking at your door.
Okay, we're going to come back to that in a minute, but Josh and Abe, how do you diligence it? So you're buying a facility and you want to know whether or not they is skilled appropriately or not. Mini RAC audit, what do you do? Bring Zimmet in, what do you do? How do you diligence it?
Yeah, I don't think you're doing a mini RAC audit. I think you are, first of all, you can look at census data, right? So, what are we talking about, right? There are some facilities that didn't skill in place as much as other facilities. We look at that. So the facts, there's general, kind of like broad categories that you can kind of review and get to the point where you can, assume what the risk would be. Obviously, you want to, from a valuation perspective, right, we're talking about that kind of due diligence, is ignore some of the, one-time increases in revenues, whether it's stimulus or skilling in place. That's not what you're really getting to. What you're talking about is how do you protect yourself? How do you protect yourself from this risk where you're going to wake up one morning with a tremendous RAC audit and it's going to ruin all your numbers? Number one, like I said, you look at what the numbers look like. If you can negotiate security from your sellers, right, whether it's an escrow or personal guarantee, whatever the case may be, then you're pretty much, protected at that point. If you're going to lose the deal over that, you need to make a business decision, right? Can you go in and do a mini RAC audit and make a determination? First of all, I'll ask you this question as an operator, right? And someone that I know well enough that does excellent due diligence in the deals that he does. Can you sit here today and say that you can fully assess what a PUI is and what a PUI isn't, so you can't even make that RAC audit? Or is that something that's amorphous and can change?
In our organization, we've been having now a 13-month-long conversation about how we want to paper our skilling in place. And we have, this is something we discuss nonstop, right? What it looks like, we're trying to audit, we're trying to prepare for that RAC audit. My question to all of my MDS nurses is, what are you going to say to the auditor in 3 years? Show me. But again, we don't know what this particular RAC audit looks like because there's no precedent, right?
That's the point.
That's the problem.
Or definition.
Now-
So diligencing the risk is difficult, right? Creating protection in your acquisition documents, that's something we can do, but then again, that becomes a negotiation point. And I can tell you historically, every deal that I've seen it, well, not every deal, a lot of deals that have fallen apart as a result of a buyer and a seller not coming together on what appropriate security should be for potential recoupment. they either work their way out because the buyer accepts, less than ideal security because they really, really want the asset, or another buyer steps in and is willing to accept that risk. And the point is, I wouldn't criticize ever someone who wants to buy a facility. They're forward-looking, and right, you're not buying it because you're buying a stream of income in the past. You're forward-looking. You're looking to build assets, build worth, build a company. And if there's a good facility and it fits within your, let's say, your geographical footprint, or it fits within what your idea you're trying to run as a skilled nursing organization, right? But you're assuming some additional potential risk, right? That's a business decision, and I would respect that. I think everyone here would respect that.
Okay, so here's a terrifying thought, and you're going to yell at me.
Okay.
But, it's interesting that we brought up the possibility of audits as it relates to 1135 and skilling in place, and everybody talked about the possibility of overskilling. But the Medicaid statute is explicit that Medicaid is a payer of last resort in the Social Security Act, which means that in theory, you're exposed to liability if somebody could be skilled in place and you didn't. So, what do you say?
I would say that, first of all, you sound like an attorney. Yeah, I mean, it's theoretically a correct statement, right? Medicaid is your last resort, therefore,
Incidentally, it's what I'm going to say to a RAC auditor in 3 years.
maybe they'll buy it. But yeah, right. What you're basically saying is that if we took too little money from the government, they can theoretically come back to us and recoup because we should have.
You took it from the wrong source.
From a different source. You should have got the money from Medicare. You got the money from Medicaid. You took a conservative approach and said, well, I don't think this individual's really a PUI. The auditor is going to say, no, that was PUI, so you should have gotten money from Medicare. I would not lay awake at night scared over that scenario.
Do you think we'll see any prosecutions?
I would
over
not.
it?
Well, that's what I'm saying. I think it's a theoretical possibility, and I try to sometimes divorce as lawyers. We try to assess always what's the worst case scenario. So yes, the worst case scenario is if you did not skill in place enough, right, that you can be sort of dinged, or False Claims Act liability can be criminal, right? For not taking enough money from the government. That's a possibility. I cannot say that it's not a possibility.
No, but look, imagine in your mind's eye a building that had terrible COVID outcomes and high mortality. And in that investigation, it turns out that they weren't skilling. So you weren't dedicating enough resources towards monitoring and ensuring and stopping the spread, right? That would be the argument.
Yeah.
If I were a perverse prosecutor, that would be the argument.
That you had the ability to put more money into your, nursing home so you can provide for better care, and you were negligent in doing so. I mean, yeah, you can make the case. By the way, if an operator was negligent, if an operator ignored the resources that were available, PPP loans, stimulus money, whatever was available to help them through, and they're going to say, well, sorry, I didn't have enough money. I as a prosecutor, putting on a prosecutor hat, I never did that, but I can see how one can make the argument because there's no place for negligence in nursing home operations, right? But I would think that if an operator was working in good faith and tried to be very fair as far as, and not abuse the system, right, and making indications of, well, everyone's a PUI, right, and not, overwhelm, means taxpayers' money we're looking at, right, and was operating in good faith, then it's a much more difficult argument to make. So again, it's how you really kind of paint the picture. I just want to touch on something that Tamar said earlier as far as increased government scrutiny, and I would just be remiss if I just didn't mention it, and don't need to, shift the conversation because I know a lot we're talking about is COVID related. However, increased scrutiny means not just as far as Medicare and Medicaid, obviously, proper care. It also means, your entire operations, which does include, in my opinion, your vendor relationships. Because once they're in there and they're auditing and they're reviewing your files and reviewing your operations, they're reviewing everything. And what I've been seeing or hearing a lot of is this, joint venture model, which everyone's, well aware of, working together with vendors. Just going to say it publicly, right? Doesn't have to be my firm. There are a lot of good lawyers out here. Review your vendor relationships. Make sure that they're, I guess when I first started practicing healthcare, I was sort of more of a generalist, but healthcare law specifically. I was talking to a partner of my old firm, and she told me that when it comes to fraud and abuse and anti-kickback violations, a lot of what are just very normal, good business transactions when we're dealing with Medicare, Medicaid is per se illegal. And I've seen the situation come up, Tamar, I'm sure we've talked about it. You've seen the situation come up where people innocently walk into transactions that make sense on paper, and then it turns out they talk to a lawyer after the fact and need to redo their contracts. And actually, we were talking about that the other day as well. So that does happen. It's something that we should just, audit your vendor relationships, because that's something that is important for everybody.
Okay, so one of the themes that everybody seemed to touch on is manage your data, know what's going on, know everything about your organization for compliance, and have systems in place. What tools do each of you use working through the panel to make sure you are on top of all of your data and all of your compliance?
So I was involved with the Quality of Care CIA several years back, and we realized through our journey of the CIA that the government's requiring dashboards and they're requiring the data, and we realized that the information we were getting was too contingent on the person putting the information in. Meaning your DON leaves, they take the fall log with them, and here you sit without your information. So this organization put together a very robust technological platform that dealt with the dashboards for quality of care, financial issues, grievances, which today is sniff metrics. But this organization did cut their CIA down by a year by being able to prove to the government that they were really able to be proactive. And there's one thing you're going to leave: proactive versus reactive.
They were able to cut their CIA down because they showed the government they were tracking everything, or because their outcome data was good?
No, because that they were able to find their own, they were able to self-assess. They were able to accurately see what the issues were in their building. The thing about working in a CIA is not necessarily great outcomes, it's finding the problem. It's very counterintuitive compared to a CMS. We're looking for our problems, we're showing it to the government, and we're showing them how we're gonna resolve it. But if you can't get to the core of what your problems are, and your data is, every DON is gonna tell you what a fall is something different, and you're comparing apples to oranges. So they were able to really create a platform that looked at apples to apples and did phenomenal.
Keith, what tools do you use for risk management?
Yeah, we really get involved in review the corporate compliance programs and the ultimate outcomes and what's being done to fix any issues. We face it on two fronts. One, the insurance companies really want to know what's going on and why they should work with this client. And the second one is on the lending side, because ultimately we're going to the federal government for funds. They're going to want to know, hey, what's the CIA in place for, and what's being done about it, and how are you remedying these situations? So we're more of the monitoring, really asking the hard questions and trying to delve into what happened and what are you doing to prevent that from happening again, and what's the future here.
So I agree with Tamar. The stuff that we actually use is a homemade-based platform on the metrics that are specific to the facilities where you have identified what your risk is. There are different facilities, whether it be an AL, IL, drug rehab, long-term care, LTACs. So your risk is different in each individualized of what you offer and which way you're going. I think that having a centralized dashboard, as we do as well, and making sure that we can justify every single of what we did as far as tracking, identifying, and it's interesting that Tamar said what she said, because it is true. They're not so much, believe it or not, looking for if you had the fall. They're looking what are your policies that either you copy it afterwards, and what will you fix to identify it. And that was the big, so we use a homemade metrics that we have made in the risk areas, whether it be in wounds, whether it be in nosocomial infections, whether it be in situations where there are falls, and whether it be whatever the scenario is of the hot ticket items. And what that does is, so if you're using PCC or Matrix or anything like that, it also does an interflow into, integrated into the actual chart itself. But I think that that if you have a good QAPI process from what happens in a bad situation, even though there was a bad outcome, even with CMS today, but especially with a higher level of an investigation from different outside government bodies, if you have that, A, tracking it, B, you interdisciplinary sat down and went through what you believe is the right approach, and then you have changed what it is that you do, is really helpful in lessening the blow of violation / also, what's going to happen down the road.
So it would be a little bit self-serving and shameless marketing to say, the easy answer, which is, hire excellent legal counsel. But that is true. But I'm actually going to answer this question by saying, quick incident happened actually yesterday. I was talking to a client of mine, and he asked me, when should I start thinking about bringing in in-house counsel? And I asked him, well, how many facilities do you have right now? Because no one always keep track. And he told me his number. I'm like, now. You get to a certain point, and outside vendors that provide compliance, the best compliance programs can operate with the facilities as good as the information. It's a two-way street, and a lot of what they ask you for, are legal by nature, and to funnel that through an individual and I was a little surprised by how many fairly large organizations didn't go and get in-house or even a team. So I would say that is an excellent tool that will help you through your compliance through this process.
I think, Tamar, you made a great point. You're only as good as your worst employee's input. So garbage in, you're going to get garbage out, and you're going to have a strategy of how to deal with something that on data is really not going to effectuate any change. So that's why it's very important that you just don't have an interface. You actually have a risk management, a council,
right,
a whole robust program, like
right,
Amy just said, to be able to analyze this data. Does this even data make sense? Or are we fooling ourselves where the vulnerabilities are?
Right, in-house attorney plus compliance officer. I think I had to combine the two. I think a lot of people are doing compliance officers and saying, well, I'm using outside counsel, so what I need. But I think in-house counsel can be a tremendous asset to help organizations, especially during these uncertain times.
Okay, so increased scrutiny, lots of extra light on the industry. New normal, or we're going to be back to normal at some point, and how long will it take to get back to normal if you think that's the way it's going?
Wait, let me stop.
Normal?
Nursing homes, normal. I don't know. It's a little incongruent.
Are we?
It's an oxymoron.
Is our current relationship with our government overlords the new normal? That's the question. Let's start there.
For words. So you're a libertarian by nature? Is that
No comment.
I mean,
DeSantis 2024. Go ahead.
Things, right? I mean, we're coming out of a pandemic, we hope. I mean, but numbers are heading in that direction. So it's going to take some time. Things will be more normal, is the best I can say. I mean, it's going to happen, right? I mean, I've seen it with insurance, with my own state in Illinois, that there was a period of time you couldn't get GLPL in Illinois. Now you can. Ultimately, I think that we're all by nature, we evolve over time, and I forgot who said it in one of the earlier panels, but the country, generally speaking, society needs the for-profit nursing home sector to continue to thrive, because we all know that when they're government run, it just doesn't really work as well. So yes, there are times they make it more difficult. There was a cut from Medicare, they changed the system, but we evolve, we figure it out. We're evolving right now. We're coming out of this pandemic. Things will, there'll be some quiet, both, after and then again before the next storm. It's going to happen again. Whatever, who knows what it'll look like. But yeah, things will get more normal, and then things might not get so normal again. It's my feeling. It's what I've seen basically my entire career doing what I've been doing.
I do think, though, that the bar is set higher now. that the expectations of the providers are higher.
Oh, definitely.
On a permanent basis?
Yeah, I do. At
You think-
last OIG walkthrough I had, they brought a data analytics person with them
Yeah.
to the walkthrough. I mean, the bar's higher, and we have to be prepared to really become more sophisticated and technological and be prepared for that.
Okay, next question. Did the industry handle the pandemic better or worse than you expected?
Better or worse? Who's taking that one first? I guess
Keith.
I'll start. What?
Insurance.
So I think there were a number of facilities in a number of states that managed well. I think there were quite a few that did not manage well. We saw kind of a mixed bag on that. Some were prepared, had good plans in place, and others didn't. So it was.
Did it correlate to whether or not they were hit early or late?
I'm sorry?
Did it correlate to whether or not they were hit early or late in the pandemic?
No, not really. I don't think so. I think you have, again, there's a big difference between a 1-star and a 5-star as far as what they're planning for the future and the processes they have in place and the quality of the staff that they have in place. There's a big difference, and the leadership of those 5-star buildings usually are forward-thinking, whether it be a disaster plan or a pandemic plan or looking towards the future. I think those buildings are the ones that did very well, and I think a lot of the distressed properties and lower staffed, more rural facilities just didn't do as well.
I actually, may I differ in opinion?
Absolutely.
First of all, okay, there may be a small correlation to having a 5-star, 1-star, depending on their situation, doesn't necessarily mean they had less. It just has to be a function of the 5-star system, which I'm not going to get into right now. But what I will tell you is I actually think the industry, for what the tools they were giving, did better than most. And let me give you an example. Johns Hopkins University, great hospital, right? University of Chicago, great hospital. NYU, great hospitals. They all had unbelievable issues to the pandemic because of the lack of guidance that were being given by the CDC and the overall medical community. So if we're talking about hospitals that have billions of dollars and unbelievable hallmarks of our medical institutions around the United States of America, how do you expect a rural facility sitting in North Carolina that doesn't have that access and those fundings to be able to act in a way that would be as equal to an institutions like those? So you have to put in perspective. To me, because one of our what we did in our consulting end of it was we were in 13 states during COVID in the thick of things, okay? Over 30 nurse practitioner infection preventionists we had going to buildings, setting it up right, people got into trouble and things like that. And I think that instead of the government and their state agencies trying to help our underserved industry, we again became the scapegoat, but they really did well for what they had. I mean, what are you going to do when you have a COVID outbreak that came in from a family member or an ambulance driver that came back to your facility who's in a 3 or 4 bedroom or had or dining with everybody? The setup was so, and that's why I said in my earlier point that I made in the first thing about how they're looking at this differently is that nursing homes are a hotbed for that to happen without those types of guidance that the skilled nursing facilities just never got. And they became, again, in some communities, the scapegoat.
I want to take a slightly different approach to answer your question.
By the way, you do notice that every time I say something, he says, I got a different approach.
Different approach, no, different angle. Different
No,
angle.
I'm just kidding.
Because what you're saying is correct, so how do I can't argue with correctness. No, what I really, I guess from what I saw in talking to clients, whether it's owners, operators, REITs, banks, you name it, to answer your question as far as, better or worse than expected, it depends on what the expectations were, right? What I can say is that I feel, and it's evidenced by, this conference and just general, the environment and the feeling you get when you come to ECAP, there's always this sense of community, right? We're all in this together. That was both before, and I can tell you certainly during and post-COVID, that people with resources, people that had an idea. It wasn't like, nothing's proprietary. And whether it's banks telling their clients, whether it's owners talking to other owners, I've seen a lot, and I guess this is maybe anecdotal at best, but at least from my observation. So if the expectation was, to continue to work together and help each other out, and whether it's supplying with PPE, et cetera, if that was the expectation, then the expectation was certainly met and perhaps even surpassed from that perspective.
I think, Ed, you made a really good point, though, the early COVID cases versus later on. Because one building I was in got hit really early, and we were deer in the headlight. But then you were able to see what was happening and create emergency preparedness. And
In the interest of full disclosure, it was a self-serving observation.
I mean, like I said, and again, I don't want to harp on this, but like the lack of guidance of the first 30 days caused facilities to have a roar through and wreak havoc on our most vulnerable population, and then they come back and say, you're the problem.
Right.
Yes, we're the N95. Do you know how many times I spoke to the CDC and yes, 95, no 95s, take the mask off, don't take the mask off, blah, 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 until they got it straight of what the actual guidance was. Even the surveyors. I have an actual video, because I took it, I should probably not say that on there, but of a public health body coming to a facility that they were in there, and they gave them an L for FTAG 880, and they were walking out of the facility with all their PPP, forgot something, walked right back in, walked right back out to their cars. And I actually have a video of 5 surveyors who are supposedly the ones surveying you on what protocol is, violate the protocol, and possibly spread the infection. So that, once it was out of the what was it? What's that the famous saying? You can't put the smoke back in the cigarette?
Right.
Once it's out, it's out. And that caused that type of melee that happened.
Okay, final parting words, because we're coming to our end of time. If you had one message for the audience, starting from Abe, working back.
Okay, well, my message, on the transactional side, I'll say it again, diligence, 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 and on the post-closing operation side, compliance, compliance, compliance. I mean, that is what the future, right? I mean, I think Tamar said it best. Cash out of the bag, smokes out of the cigarette, trains out of the station, whatever phrase you want to use. Right? There are some permanent changes that are happening in the industry. There is increased scrutiny. Increased scrutiny means increased risk in all aspects of your business. So know what you're getting yourself into, and build really strong, excellent compliance programs. And as always, patient care comes first.
Ditto.
Thank you.
Not
That was
different.
easy.
I have a different angle.
Go for it.
Different approach. He's 100% right. Clinical excellence. You have to run on clinical excellence, because if you don't, you have nothing that will hold water. And understanding what it is that you're trying to achieve and actually achieving those goals. Bad things happen. We're in a humanistic business. People make mistakes, but the thing that I would tell everybody, we have to play by everybody's rules. Now, I had a client who I love dearly who calls me up and says, but how can they do that? That's not fair. That doesn't work. Okay. And I keep on trying to bring them back to center is their rules. They're set up for a reason. Therefore, they can and they will. So know exactly what your vulnerability is so that you 100% can prepare and use the tools that people give you. I know everybody's extremely financially, wanting to be financially responsible in today's world of risk. Or just the nursing homes in general and how things are playing out with the cash flows in this situation. But it's like penny wise, pound foolish, because the more you have the resources to actually get the right people and or train your right people to do exactly what Abe says you should do, the better off you're gonna be in the long run, and you're gonna pay 100 times more later on. Prevention is way better than intervention. It just costs wise and just the way you set up your organization. So that would be my
Keith?
So you're doing all these great programs and you're putting in corporate compliance and you're doing your due diligence with your acquisitions and you're going through all these processes. Make sure that you're able to explain that to your vendors. Make sure that the insurance companies know. Don't rely on your broker to tell them. A lot of brokers out there don't understand the whole processes. So while some can articulate it, others can't. So get involved, be proactive, work with your insurance companies, explain things. Same thing on the lender side when you're going through a transaction. Tell them all the great things you're doing. If you're doing all these great processes and you're looking towards the future and you're implementing all the things that you're going to need to focus on change for the future, be sure and expand on that with the insurance companies and the lenders and whoever else you deal with so that they know what's going on and they can judge you fairly based on what you're currently doing.
Tamar?
Yes, I was told once that my name came up on an administrator's chat group, and if you hear the name Tamar Abell, you're in big trouble. So don't get there.
That's good advice.
I'm not doing this so good from a business point of view, right? But no, don't get there. Everybody really needs to be proactive. Get your systems in place, get your technology in place, whether it be sniff metrics or another mechanism to track your data, to make sure you know what's going on, your grievances. Again, compliance is about managing your risks.
Great.
The OIG is going to knock on 50% of the doors of people here. Be ready.
Because data is going to get you into trouble, but it also will get you out of
Right.
trouble. So
Right.
if you're doing it right and you have that situation set up appropriately, that will get you out of trouble. But if you're not doing it right, it will bury you.
Okay, and with that, thank you to our panel.